Hi, Ashwin.
Hi.
The reason I called today is for you to shed some light about the markets and to share with my friends and associates and my networks some of the assistance and intelligence and support that you've been providing me as my investment strategist, my wealth strategist. Since we've been investing together, I've learned so much about yields and risk management and how to buy into solid business names at really discount prices. I know about flows. I know what the big boys are doing. I have such a depth of intel that helps me make really good decisions and take back control. When I was banking with larger financial institutions, I felt I was at their mercy and I lost big time because I was dependent and I was scared and I was insecure. So I feel that I'd like to share some of the support that you've been giving me with my friends, if that's okay.
Yes, of course.
And I've prepared a series of questions for you this evening. Now, you know, we've done a couple of videos before, and it strikes me that everything that you said actually has come true. So what can we expect going forward?
Well, I advise everyone who's watching this video right now to go to our YouTube channel, bit.ly/algowealth, and watch our last two videos. In those two videos, we talked about market volatility, the buying of quality names, and the early Fed taper.
Mm-hmm.
The market has dropped this week due to higher bond yields, which we expected. But having said that, we still expect the S&P to climb to 5,000 next year and the NASDAQ to 16,000.
Wow.
However, this time, the market will not be broad-based, meaning not every stock that you buy will go up as the index climbs.
Right. So how can investors profit from the market volatility?
Well, with higher interest rates next year, the focus is now on buying quality companies with healthy balance sheets, strong pipelines, selling products and services that are in demand. Now, this is where I come to my next point. We talk about buying quality companies. Not everyone has the kind of huge capital to buy AAA companies, or rather AAA stocks.
Yeah.
Because the outlay is huge. The outlay is huge. Now,
can't compare myself to the Buffetts.
The financial market has got a product known as the contract for difference. In the contract for difference, investors can buy top-class companies, blue chips, at only 10% of the actual price. For example, Apple costs $145 a share. The CFD is only $14.50 US per share. Look at the difference. So now this is what we call
the yields from that?
This is what we call the Air Asia of the investing world, where everyone now can profit from top-class companies.
So are the yields the same?
Correspondingly, a bit less, of course, from the mother share, but you still get to participate in the action. If the mother share goes up 30%, you probably make about 15 to 20%, but it's still good enough. And look at your outlay; it's only 10%. If you pay the interest cost with the 10%, it'll cost you about 14% on the whole, 4% interest cost a year. It's still cheaper than buying the mother share.
Interesting. What advice can you give for FX traders?
FX traders, you have to now be careful, because with this Fed taper, we see the dollar index going to 95, and we see major currencies falling against the US dollar. On the 29th September alone, the dollar index surged above 94.40 when Fed's Powell said that they will act if inflation goes too high. Now, another important tip for FX traders. The bond market is the crystal ball for interest rates. If you want to know which way interest rates are going, look at the bond market. Now we see bond yields going up and bond prices falling further. And with this, the US dollar will go higher.
Cryptocurrencies seem to be the flavor of the month. What do you think?
Cryptocurrencies, now the whole picture and the dynamic has changed. The focus is now on currencies besides Bitcoin that are faster and cleaner to mine. And also these currencies are much more compatible with decentralized financial platforms as well as blockchains. And these currencies, besides Bitcoin, have gone up between 100 and 6,000% this year. So now I would like our investors to look beyond Bitcoin. Bitcoin is no more the flavor of the day in our universe anyway. You may still think as an investor that Bitcoin is going to go up to 100,000. Well, let's see. Talk is cheap. We think otherwise. These special set of currencies, I will tell you what they are, and they are the new superstars. Avalanche, Cardano, Chainlink, Curve, Elrond, Phantom, Solana, SushiSwap, and the Graph. For all of you who want to know more about this new aspect of cryptocurrencies, please watch out for our next video on cryptocurrencies only.
Yes, we'll do that one. But doesn't it strike you as being very high risk cryptos? And unfortunately,
I'll come to that later because I will come
the
to that
yields
later.
are so high. It's amazing. We'll do a video on
there
cryptos by itself.
There are different ways to invest in cryptos besides the spot market. When you say that the risk is high, yes, the risk is high in the spot market. But right now we have ETFs on cryptos. And a lot of people don't know about this. If you invest in an ETF on a crypto, it's much lesser than the spot market.
So what sets you apart from other automated robo-advisors in the market?
I like that question very much. Last year, in March, when the market dropped 30%, all the robo-advisors and machine-only algorithms rushed to short the market. On the 10th of March, the market started dropping 20 to 30%. And all the robo-advisors started shorting the market. We were sitting down there watching, and we were telling ourselves, this is not going to be turning out right. Why? Robo-advisors and machine-only algorithms work on past data. That's all. They have no emotional intelligence. They have no way of looking out of the box. They just look at past data, that's all. And that's how dangerous that is. When you put in the human element, when the Fed came in last year to save the stock market and pump in all that money, the robo-advisors were caught off guard because they didn't understand. This had never happened before. It was an unprecedented action. Robo-advisors cannot handle unprecedented actions. They only look at past data. Now that's where we come in. Our algo is 75% machine, what we call artificial intelligence, but 25% human intelligence. That is the big factor that makes the difference between the algos out there who are machine only and us.
So do you mean you skew the biases? You adjust?
Yes, when we put in the human factor, we start understanding and feeding into the algorithm the extent of the Fed action that took place last year. And that caused this market to go up more than 90%. It's very, very important. But at that time, nobody believed us because they're thinking machine only. Everything is programmed. Everything is good. Machines don't have the heart of the human being. Machines don't have the loyalty of a human being and the emotional intelligence of a human being. That's why they lost money. Let me give you the name. The Renaissance Tech Fund. They had billions of dollars of clients' withdrawals because they lost the money. Based on past data. Not talks about that anymore.
Yeah. Somehow I feel that the financial institutions tend to withhold these vital bits of information that so that they have the upper hand.
I
What other vital advice can you give retail investors?
Give me a sec. I haven't finished this question yet.
Okay, okay.
This is why we're called human quant, 75% machine and 25% human genius. Now, to answer your last question, we have access to data which is being kept from you by a bank. The US stock market is a different kind of animal. If you want to make money in the US stock market, the options market controls the US stock market, not the other way around.
Yes.
So invest in US stocks, you have to at all times know what the options market is doing. And that's where we come. If you do not have options market data, you can never, I can tell you now, you can never make money in the US stock market. And besides that, when the big boys want to buy stocks in the US stock market, they don't come to the S&P 500 in the public market and buy. Private exchanges and buy in secret. So if there are 100 million shares of Apple being bought, you will never know. Okay? Like I'll give you an example, real life example. Last night, 15 million call options of Netflix were bought. And the market was dropping and nobody knew. This is where we come in with options and dark pool data and a smart algorithm, 75% machine, 25% human.
So since I've subscribed to your intel, your trade alerts, sometimes I find it difficult to understand the trade language, the jargon. And it's really good that you're online to hold my hand and to explain situations to me, like event-driven trades that I wouldn't understand otherwise. So tell us how to contact you if we wanted to subscribe. What is the process if we wanted to work with you?
I'll tell you that at the end of this video. And to answer your last question about difficult jargon, that's where we have a hand-holding process to you. We'll contact you on the phone and explain to you everything, also by email. Now,
because like a retail investor like myself with not a lot of money, sometimes we feel shy. Sometimes we don't want to bother the big banks.
You're paying us to hold your hand, so simplify everything. And before I sign off, I like to give all investors out there a piece of advice. Before you embark on your investment journey, ask yourself two honest questions. How much risk can you afford? In this case, paper risk, not actual risk. And secondly, how long can you wait? Why do I say paper risk? Today's paper loss can be tomorrow's profit. And today's profit can be tomorrow's paper loss. But so far in our trading journey, we have always had a paper loss turn into an actual profit. So some investors, when they wait 3 to 6 months for an equity position to yield sizable returns, they get nervous when market goes up 2 to 5%.
Yes, of course.
You have to ask yourself the question. You have to be comfortable because volatility is the order of the day. You cannot escape that. That's why it's called management. It's not guaranteed no loss. It's not called to manage the risk. So when we manage the risk for you, you have to ask yourself the question, can you sleep at night knowing that you're losing 5% on paper?
Well, I can because I know that you are watching it for me. So that's why I want to share your contact.
Before that, as long as you can wait for 12 months, there should be no problems. You can wait for 12 months because we are very sure of the quality of the product or the quality of the asset that we are buying.
So what's the minimum amount of asset under management that you would take on?
Let me finish that. Let me finish the last question. So we're talking about risk and time. How long can you wait? And how much risk can you afford? The most important thing that investors have ignored is the quality of financial intelligence.
Yeah.
Nobody today has addressed this issue. You want to trade, you want to make money. But what kind of financial intelligence do you have? That is why the market drops, you panic.
Yeah.
But see, when you have good financial intelligence, when you know what the big boys are doing, when you know what kind of company this is, when you know the quality of the products they're offering, why would you get scared? Why would you get scared? Today, if Apple crashes in value, would you get scared? No, because you know the company, you know the products, you know the pipeline. This is what I mean. Investors have to look at the quality of the financial intelligence. And that's where, once again, we come in. Because we are very sure of the quality of the financial intelligence that we are offering you in global markets to make money. We can take our hat off to that. We can stand our ground on that. Because let me tell you, the research house of today that the stockbrokers offer is outdated. That research is outdated. We do not look at yesterday's research. We look at research where what's going to happen tomorrow. What is out there is they look at yesterday's research, which already happened. That's the difference between us and the world out there. And before I sign off, now this is where I'll give you my contact. My email is ashwin@ppchk.net. We have right now a limited offer, 50% off. If you want to know more about it, please contact us at bit.ly/algotrader, which is our direct WhatsApp link, and we'll elaborate more on the WhatsApp to you. 50% off for only 10 subscribers, because we want to make sure we get more people to be exposed and experience what we are offering.
I certainly know about the difference that you've made. So I'm just wishing that more people can feel as assured and as safe and as confident as I feel. So thank you so much for sharing, Ashwin. And I'll be in touch for speaking to you on cryptocurrencies next.
Thank you very much.
Good evening, and thank you so much again.